Hi there. It's me again. Shilly. I'm sure you've heard of the term free float. Well, let's talk about that for a minute. What is free float, and what does it mean for me as an investor? So what is free float? Free float refers to a company's shares that are freely bought and sold without restrictions by the public. Denoting the greatest proportion of stocks trading on the exchanges, the float consists of regular shares that many of us will hear or read about in the news. It is important to understand the composition of a company's shares. There are two main categories: authorized shares and outstanding shares. Authorized shares refer to the largest number of shares that a single corporation can issue. The number of authorized shares per company is assessed at the company's creation and can only be increased or decreased through a vote by the shareholders. It's important to note that just because a company can issue a certain number of shares doesn't mean it will issue all of them to the public. Typically, companies will, for many reasons, keep a portion of the shares in their own treasury. Not to be confused with authorized shares, outstanding shares refer to the number of stocks that a company has issued. This number represents all the shares that can be bought and sold by the public, as well as all the restricted shares that require special permission before being transacted. As we already explained, shares that can be freely bought and sold by public investors are called the float. This value changes depending on whether the company wishes to repurchase shares from the market or sell out more of its authorized shares from within its treasury. The number of authorized stocks is mostly higher than the number issued to the public. It allows the organization to offer or sell more shares in the future if it aims to raise added funds. A company might also avoid issuing all of its authorized shares for maintaining a controlling interest and prevent the company from experiencing a hostile takeover. This could very well be the reason why we haven't seen any splits from GameStop. They're being extra caution considering that the institutions are doing what is known as float churning, but we'll get to that in another video. The goal of float adjustment is to adjust each company's total shares outstanding for long-term, strategic shareholders, whose holdings are not considered to be available to the market. Note that each shareholder is not judged individually based on its intentions. Rather, shareholders are grouped into different types and based on that type are either included or excluded from float. Long-term strategic shareholders often have interests such as maintaining control rather than the shorter-term economic fortunes of the company. For example, holdings of stock in one corporation by another corporation are normally for control, and not investment, purposes. Similarly, most government holdings are not typically investments made for only investment purposes. This is why stocks with high institutional ownership are often heavily manipulated as the institutions ultimately get first rights on float ownership. So there you have it. Now you know a little bit more about free float. If you enjoyed this video, please be sure to leave a thumbs down and unsubscribe if you haven't already. Until next time.